Okay, welcome in, you Muscadine Mafia. Now, here's what's interesting. James, you're coming, right? James is in here. James, aren't you coming to Atlanta? Here's what I told Ed would be so cool. Now, think about what experience this is. James is a pilot. What if James touched down in Louisiana, picks Ed up, and they flew together to Atlanta, and then I pick James and Ed up from the computer, and maybe Evan, if Evan gets there in time. Now, how cool would that be? Now, would that not be a life-altering experience? Can you imagine poor James on a plane with Ed sitting right next to him?
We have a lively conversation, and all I can offer is a tasty New Orleans po' boy. So,
Yeah, that would be fun, though, wouldn't it? I mean, if he touched down in Louisiana, he picks you up, and then y'all come up. Wouldn't that be wild?
yeah, a good old po' boy and me talking ear off the whole way.
Yeah. I mean, can you imagine? I mean, that would be something. Now, it'd be really something if he picks you up in the helicopter. Now, that would be cool. I think that would be really cool if y'all helicoptered it over. I mean, if I was in the plane, I'd have to have a parachute just in case. I'd say, "Where's it at?" You know, before I got in, I'd be like, "Well, now where is that parachute?" Just in case. But then I'd be too scared to jump out of the plane if I needed a parachute. So, damned if you do, damned if you don't. But that would really be something. All right, welcome in, y'all.
You
Our
really
little
compare it to trading. It's kind of like when you're in the stock market crash, that black swan event, and you're like, do I hedge? Do I close things? What do I do? And when you're in the plane, you're not going to jump out until it's too late. I mean, let's be honest.
Yeah, you're right. And if I did, I'd probably like jump right into the engine and or the propeller or whatever and get chopped up anyway. So, I mean, you can't win. Can't win. But I would have to go, I would sit here and I would go, James knows all about the muscle memory on what happens if you do were to go down. And so I'd be like, okay, let's just kind of review it in case like you become incapacitated and I have to fly the plane. I want to at least know, what did I pull on and what did I push on? If you just show me that, just in case something goes bad. So anyway. All right, so here we go. Well, we got our new account. Let's see what our little things are. We're over 25,000, which means we could trade if we needed to. Look at this, y'all. We are at 9 minus that. We're at 946. Oh, 9 and 46. That looks good. 946. So, wow, look at that. Really nice. Let's see what we're doing on buying power. Buying power is probably doing okay, too. So our buying power is 91.85. And so there's not much to do in the account, but I think we can have some conversations at least, 91.85. And just see where you guys are at. I mean, what an account that looks perfect. There's nothing to do. I think one of our biggest problems is that we overtrade. And I've been overtrading in a couple of accounts because I'll tell you what has really ticked me off over the weekend in making my notes and keeping my notebook close. I have come to the realization I closed so many positions that were not tested, and I didn't replace the theta. So, that's theta opportunity cost that I can't get back unless I put in additional trades. And my metrics just don't show that I should be putting in additional trades at the time. So we really got to talk about and figure out what our plan is going to be. So I demonized the futures the other day, but I want to go back on that and say, I'm sorry that I demonized them. They probably more times than not are going to be my default way of managing the account because it preserves my theta. And I do like the preservation of theta, and I'll just allow the metrics to tell me when to take those off. And especially in a market that we're in now with so much uncertainty, people are saying, hey, man, we are here, and you look at here, it was the little bearish rally, before things went really crap. But I don't care about that. I don't care about the Fed, and I don't care about banks and all this kind of garbage. As long as my bank, my little Regions bank, is allowing me to do what I need to do, I think I'm fine. So let's talk about it. So, yeah. So you need an adjustment. on something, what do? Well, why is that not working? Hold on, let me get my UNO tablet working. HUION. Let's wake it up. I talked to Ed over the weekend, and Ed, no, that's not what I'm doing. Ed is going to, his default strategy is going to roll to increase his metrics. And he's done that of late. So he has rolled of late. And I asked him, I said, well, what is your rule on when to do that? When are you going to do? And I think he doesn't have a rule, like if it gets to an X delta, that's when he's going to roll. I think he's rolling when he's uncomfortable with his overall metrics. Is that right, Ed? Did I say that right?
That is correct. But I also mentioned I'm only planning on rolling once before I then engage in futures. So it's not a roll to eternity. It's a roll the first time and then hedge with futures at that point. Because if the second roll starts getting challenged, that's about the limit of what I want to tolerate on an ongoing roll basis. And then separately, is anyone waiting to come in? Do you see anyone waiting?
Yeah, one more. I got to let you things. Okay, good. Keep on, Ed.
That's it. Roll once, then futures.
Okay, so basically our muscle memory here is these are the things that we can do, right? We can do add futures, we can roll, we can close profitable positions or unprofitable positions. And finally, you can buy protection, buy puts. And it's funny, over the weekend, I was like, well, this is where I think I need to be. I think I need to just close stuff down. I need to buy puts. But then the more I thought about it, I said, my little friend futures, they worked on June the 16th. Why would I not and abandon those? And I know what we hate. What we hate is we know that the market recovers. And when it recovers, we lose on our futures. But that should be fine, because instead of you closing these positions and taking your theta from 100 down to maybe 50, by doing the futures, you're getting to keep your 100 theta. So your theta decay per day theoretically is preserved. So yeah, directionally wise, you're losing when the market goes up on your future, but you're still collecting on your theta. Now, here's one thing that we hadn't talked about, all of you Vega people. When we recover, you lose dollar for dollar on your futures, but what are you also probably making money on? On your short Vega. All right.
Evan wants in.
Oh, Evan. Okay, let Evan in. Oh, he's got his hands up. Go ahead,
He
Evan.
wants to speak. He's being
So we're
polite.
making money on our short Vega, right? So your short Vega volatility would go down as the market goes up, and we would lose money on that short Vega that we're carrying. Go ahead, Evan.
So looking at your risk curve on Tasty the other day, you kind of came to the same realization that I did a while ago. And I've been floating this idea around a few people in the room. But you looked at your P&L curve and you said, hey, this looks a lot like the call side.
Yes.
And I agree. I noticed that a couple weeks ago. So I started looking at it and said, all right, well, if we're going to do stuff on the call side, we're going to cap our upside profit potential. Why not do something for a credit so that we can at least benefit from it? And the thing with futures is it's kind of a dollar for dollar situation. And I know you hate this, right? You hate selling calls because selling calls sounds bad. But if you remember 6 months ago, I messed with selling calls. Tasty came out with their stuff saying, hey, if it's under a 10 delta, it's profitable. So maybe something you want to consider, because you bring in theta, you neutralize your delta. And it's, just like the futures, if you get to a point where you say, oh, now I'm unbalanced to the upside, well, what would you do with the future contract? You take it off at a loss. So where's the harm in taking the call off for a loss?
That's a good question. At least you're increasing your theta, right? You are getting theta from that you're not getting from the futures.
Right. And we know that the 10 delta is profitable. Now, the one downside I can see, Vega risk. But like you said, you're going to have that no matter what. You can't really beat Vega. We seem to have been struggling with that. So, oh, Stacy's been doing call 112s. I'll kind of briefly go into what I was thinking and what I've talked to Ed and Brian about lately. Instead of doing a call 112, why not just sell a call at a 10 delta or less? So with the call 112, you have to bring in twice as much credit to cover the debit spread. If you don't have to bring in that credit, what that allows you to do is simply sell a call at the 10 delta or lower, and you don't have to finance the debit spread, so you can get further out of the money. And then your upside risk isn't really capped that much. And I'm happy to pull up my account if you kind of want to see an example.
Yeah,
of what
let's
I'm
see
talking
that.
about.
Let's see that.
That might help.
Let me fix it where you can
Explanation here.
share here. Hold on a second. That's what I love about our group, y'all. Just the think tankiness of it, you know.
Just a second here.
I like what Glenn said. He said, I had a short future on since Friday, and I'm short Delta today because of it, and this counts up almost $500. Yeah, that's great.
Can you see my screen?
Yep, looks good.
All right. So this is kind of what I'm looking at. You can see I've got a couple old debit spreads in here. And then these have gone on over the last 15 days. Started a little bit higher than the 60 DTE, but just 111s. And currently my delta is at a 14, which is fine. I don't need to do anything. I'm going to later because the ratio I'm kind of messing with is trying to keep my delta at about half of what my theta is. But if you go in and let's just say I want to cut that in half today, which is probably close to what I would do. We'll go into that same 60-day cycle and just look for a 7 delta call. And okay, so that brings in $7.75 of credit, neutralizes the delta a little bit. And then it looks really similar to capping the call side with your future. The difference is if you look, instead of doing the 112, if you look at where price currently is, it's a lot more balanced in the center than if we had to bring in all that extra credit to cover the 112. So I don't know, just an idea. That brings in another so 2.7 theta, almost 3 theta, and balances the delta. Capture your
Okay,
side,
can you snag a picture of this, snip it, and then pretend you're selling a future and look what a selling a future against it looks like?
Yeah. I can do that. The issue is the deltas are going to be pretty different.
Okay.
So a future would give me negative 50 deltas. So I will just increase this to negative 50.
Okay, got it.
Right. So now we're looking at the same thing here. And by doing that, that brings in 19 theta. So that more than doubles my theta.
Well, if it was short of future, it wouldn't bring in the theta, right? So it's
short of future.
Yeah, short of future. What would that kind of look like? Yeah.
Wow. So
wow, that's kind of cool. That's shorting one future, right? So yeah, it kind of messes you up to the top side bigger. I mean, you start losing instantly on the future. So it looks like in your case, that looks better, doesn't it?
Yeah.
Because you still got a ramp to run up.
And with the theta, we know that over time, this position will get stronger. But this is also a very large adjustment, right? I mean, I'm not going to sell 7 calls right now. I wouldn't sell one future right now, but it's the same thing. This isn't going to get stronger over time. I mean, it is, but only to a degree. So that's kind of what I'm looking at and messing with. I've talked about with Ed about strictly managing by the Greeks, not trying to overcomplicate it. Just 60 days, 1-1-1, have a good delta theta ratio, call it there. So yeah, figured I would share that with you, and maybe it's something to consider.
You
since we're
said delta
capping.
theta ratio. What are you looking at in the delta theta ratio? I know Ryan is looking at that as well. And I think his thing was he kind of doesn't want it to get over 1-to-1.
Yeah, I mean, 1-to-1 would be great.
Mm-hmm.
I think it was the Tasty video that somebody posted in the room. Their guidance was your delta should be half of your theta. And I think it was Tom King that posted his portfolio metrics in his chat today, and that's about where he's at. He's at, like, I think he said 500 delta, 1000 theta. So it seems like that half, that 0.5 ratio seems to be a pretty common good sweet spot. So I'm going to aim for that, see where it gets me. It might be impossible to keep it balanced there. But that's my goal. See how things behave that way.
And when you were doing the calls, I mean, here's the thing, as long as you're keeping the positive deltas, it's the same thing with the future, right? You don't care that they're losing a little bit, and you've widened the runway up to the upside.
Versus the future, right?
Yeah, versus the future. Makes a lot of sense. I could see adding it into maybe my optional hedging strategy, right? Because it kind of is a hedge at the same time, because I'm hedging my metrics, kind of keeping them down. And at the same time, I'm increasing my theta, which we love. Yeah. When you were doing the calls, and it wasn't that you were doing horrible with the calls, right? I mean, they were doing okay. It's just that you were like, I just kind of hate, managing both sides. But then there are times when our delta gets a little heavy and we need to bring it down. That's all we're doing.
Yeah, so when I was doing the calls, they were profitable. They were fine. I didn't have any issues with them. What ultimately kind of made me cut things off and start over with the TND strategy was that I had so many positions on. And if you remember, this was at the time where we were removing the short legs on the debit spreads as well. So what ended up happening was I had 1-1-2s on the call side and the put side, and we were removing naked puts at 90%, and we were removing the short legs, and everything just got to a point where it was too much to really decipher without sitting there looking through every single position on my spreadsheet. And this is kind of about the time when we started talking about the TND and all the sweet Bobby hedges and stuff. So I was like, you know what? I'll start over from here, since I was break even or slightly profitable on it. It's like, I'll start over here. I'll run the pure TND strategy. And that's really what caused me to do that. But we learned our metrics matter. So
yeah, and this allows us to still keep our metrics very meaningful.
Yeah.
John says, what's the difference in buying power effect with a call versus future? Well, the future should have more of a buying power effect than a single call, we would think, right? So
yeah, it doesn't really work in this account because I don't need the negative deltas of the future. So I get buying power relief from the future, but if I were to put on 7 short calls right now, I would have more calls than I do puts. So my buying power would technically inflate if I did that, but that's because I'm adding way too much negative delta that I don't need. So with where the account's at right now, I can't really compare the two of them. But
so
I think that my plan with the futures in the future would be as like the emergency. It's like, okay, I need 150 short deltas. I can't get that selling one call. I've also learned not to throw on, 5 tranches in one day, because then when the market moves the other way, it really hurts. So for me, the futures are kind of the emergency. Oh, I can't balance my deltas the way I need to today. Then I put on a future. But for the smaller adjustments that we seem to keep making, just kind of do the call side.
An interesting question for you, Evan. Are you going to still put those around the 60-day, or how are you going it shorter on these? What are you doing?
60 days.
Okay.
That's the plan. Throw them on at 60. I'm not going to do the debit spread portion. The real thing with the debit spread is we want that to get stronger over time so that if we get a pullback
Yes.
and volatility goes up, that we feel a little bit less pain. If prices push up, volatility is going to drop anyway. So we don't really need that buffer on the top side, in my opinion. For me, I would much rather get further away from the money on the call side. So I'm just going to sell a call here and a call there whenever my deltas need some balancing, and it should keep me fairly far from the money.
Excellent. Very nice. Anyone else
Sorry
got?
for hijacking there.
No. That's good. This is what we do. This is why we have Muscadine Mafia, so we can have these in-depth discussions on what we're going to do. Anyone got any comments or questions or rebuttals to the call? I kind of like it, and I kind of like it not doing it with the 112 too. You know, just hey, if I need some negative deltas, it's okay to sell a call. I like that.
Hey, Bob, this is John. I just wanted
John.
to make a comment based on what Evan just presented. Just so I'm clear in my understanding, it seems like this is a metrics management move to lower your deltas as a primary motive, as opposed to lowering your BP. Is that correct?
Yes. So my theory is that your delta and your buying power are fairly correlated, right? If you have a lot of long delta or a lot of short delta relative to the size of your account, your buying power will be higher than if you're delta neutral, because you have more risk to one side. So yeah, I think the future is a better emergency, like, oh, we need to neutralize delta, we need to drop our buying power kind of tool. Whereas I think this would really just be keeping everything in line when it comes to delta, while also giving you a little bit more theta, so you have some benefit.
And you get a little bit of buying power relief, but yeah, I think you're right. It's mostly for delta adjustment. Yeah, I like it.
Hey, Bobby, I'll just say one more thing, and because it's my personal experience, and I'm still recovering from the TND strategy, because unlike Evan and you, I decided to, let's see if I can work these things down as opposed to taking a bunch of losses by, just going to the clean slate. But my experience is still, because right now the situation I'm in is I've got elevated BP, and my theta percent's not too bad. It's only at about 0.2. And my deltas are fine right now, but I have no futures on. I took those off, but I'm still experienced that I have way too many trades on. So my BP is elevated based on my size, and as opposed to anything that's really going on. And again, it just reinforces that your number of trades is still your best hedge.
Yeah, it really is. Size is the best hedge. Yeah, absolutely. If you can't keep that theta at 0.1 or so, that's really where you need to be. It's just that when, price and volatility go against you, all of a sudden what was 0.1 is now 0.2 or 0.3, right, in your theta. And then it's like, yeah, well, if we recover, I'm back down to 0.1 theta. But do I necessarily want to close positions that are perfectly safe? And that's what I was doing. I was closing these positions that may be at a 26 or 27 delta, perfectly safe, and taking a realized loss on them. How could we do something to where we go, okay, look, let's get our metrics back in line a little bit, but let's do it without getting, without closing these positions. So yeah, you get a little delta relief there. It adds to your theta. So, but on the opposite side, gives you a little bit of buying power relief. Makes a lot of sense.
Yeah. And again, that's what I would just want to reinforce, because I'm in a position where I don't necessarily want to proactively increase my theta right now. I want to let it drift back down if it will. It's not in a danger zone, so I don't feel a need to take action. So selling a call for me looks to me definitely a Delta strategy, which I'm not in need of at this point.
You're not in
But
need of
definitely
it.
good to have in the tool.
Yeah, I don't know.
Definitely
If
good
you're
to
not
have
in
in the
need of a
toolbox.
Delta's. I'm sorry, go ahead.
No, I'm sorry, I'm done. I just said it's definitely good to have in the toolbox when you're managing them on a day-by-day basis.
Mhm.
Yeah, I was just gonna say, if you're not in a position where you need to manage Delta, then you're doing great. That's, I mean, happy camper.
Yeah, good place to be. Good place to be. All right, guys, awesome session. Hope y'all have a wonderful day. I will see everyone tomorrow.